What's good, guys? I'm gonna be going through my trade, or both trades I took on Friday. I took a buy at market open, and took a sell at 10:20 a.m. New York time. For the buys, it was pretty simple. At market open, we had some pre-market highs to run out. We had a premium wick from the 4-hour time frame, and we had the Asia extensions to get to. So I was looking for price to continue trading upwards before going down to run out the London lows as well as the pre-New York lows, because as you can see, we have equal lows down there. Our market open, we had an order block that was formed inside this fair value gap, which makes it high probability. So when price traded down there, I was gonna enter, but I waited for a reaction. I waited for the close. When price closed with a reaction, I entered on this next candle. I took out about half of my position right here and got stopped out for break even on the rest. Right after that, we can see that price then traded down to the sell side, running out these lows, breaking structure. When price created this fair value gap with this inverted fair value gap, I was looking to jump in. I had a sell limit right here at this at the 50% of this body, which is a 9:30 candle. This is the 5-minute time frame, by the way. Price tapped me in, barely had any drawdown. This was about 20 point drawdown, or 2 point drawdown, some 20 tick drawdown, yeah. Then price traded into this sell side liquidity, which formed inside the hourly fair value gap down here. It's Friday, so I guess price was not willing to expand as much as I wanted it to, because I would have loved to take out these lows. Asia low was also open, but it was below the weekly open, so I kind of had a clue that they were not going to run it. Price ended up going as low as retesting the London open, which is right here, and closed for the day right there. So that was that. That was 2 trades. Good Friday, no pun intended. Thank you, Lord. All right, so let's go to the weekly time frame now and analyze the expansion for the previous week before we get into our markup for the next week. So as you can see, price is still in this consolidation right here. So it's not the easiest to read. So you kind of have to use what you have around you, pretty much. So going into the week, using this range here, what can we see? First of all, we can see that price ran out a swing high and failed to close above. Whenever that happens, we should have a rejection block in the market, right? So going into the previous week, we had this rejection block marked out as a potential high of the week candidate. I also had this low as a potential, or this rejection block rather, on the sell side as a potential low of the week candidate. Price failed to get all the way down there, but as we can see, we had some sell side liquidity that price traded to, ignoring this big volume imbalance that we had here. I see that there, but it was important right here. Now it's like we're just moving sideways, so I don't want to put too much on my chart, but that's there also. So if we had 50% of the body of the previous week. We also had this BPR, balanced price range in the market, which overlines with the week C. So I will take out the top one because we're bearish for the week. Let's go down to our 4-hour time frame. We can see how price used these levels throughout the week. So our weekly open was right here. We opened right here on Sunday. And then there was a Judah swing, which is part of the model. This is what we want to see. The first fair value gap that formed on Monday was here. So if you see, this was Sunday, then Monday right here. Then we had 1, 2, 3 candles with a fair value gap. But as we can see, price traded up into this buy side liquidity as well as that rejection block before pulling back to our fair value gap. So what would we want? For price to create an IFVG, close below, and then let's expand for the week to the sell side. But this week we had CPI on Wednesday, or FOMC. We had FOMC on Wednesday, my bad. Apologies. So price waited for the right time to use this inverted fair value gap to expand for the week to our targets. We fell short about 100 ticks, which is not the worst thing. So as we can see here, we traded up into it. So we had Monday create our Judah swing. Tuesday retested the inverted fair value gap the first time, traded lower, just validating the inverted fair value gap for us. But at news release, we traded back up into it for the final time to give us that expansion for the week. I actually caught this trade live. You should have watched the video. It's live on my channel. Obviously I can't hold for the whole thing, so I just took partials at these lows here. Alright, so that was that for the model for the week. As you can see, we also created a fair value gap after the inverted fair value gap was formed. So that's double, triple, quadruple confirmation, whatever you want to call it. As you can see, price fell very short, just short of this level again. All right, so that was that for the previous week. You can see that the expansion was valid. Everything played out right. So now let's get into the analysis for this upcoming week. Trump is just bombed Iran, so I guess everything we're gonna mark out here will probably happen in like the first day. But let's see. All right. What do we have in the market? So first of all, let's see when we have news. We have high impact news on Monday. We have existing home sales, which is at 10 a.m. New York time. On Tuesday, we have Fed chair again. On Wednesday, we have Fed Powell, Fed chair again with new home sales. On Thursday, we have high impact news. On Friday, we got high impact news. So we have high impact news every day this week. Yeah. So yeah, it should be a busy week, whether or not Trump is gonna act up. All right. So, our look back range is 3 weeks. So, of these 3 weeks, these last 3 weekly candles, what information do we have in price? We have a swing high. We have the previous week's low. So let's mark this out as we go. All right. So we have this wick right here. from the previous weekly candle. The midpoint of that wick should play an important role in the upcoming week. We have this area here that we can use as a rejection block now, because this candle failed to close above this. We expanded down to the sell side. We also have the bottom wick of this previous weekly candle. So what I can see in price is that obviously we're still in the consolidation, so we're just waiting for the right expansion at this point. We have this wick right here. So this wick here, looking at where we are right now in the market, if we were to tag both sides of this, considering how much we've been moving for the last previous, so this week we moved less than 1,000 points. The previous week before that we did about 1,000. So yeah, so if price is to get all the way down here and get all the way up here, we see how we have 1,000 point range. So these levels are the levels I'll be looking for coming into next week. So we could add the previous week's low, which is just a level of liquidity. It's not a terminus. That's why sometimes I don't add it. It's a level, cool, but it's not a level where I'd expect the model to play out, But nevertheless, we have that there. If you remember from 2 weeks ago, we were targeting this weekly fair value gap. We still have a little bit left of it to go, so I'm gonna put that there just in case price wants to expand to the top side at the open. I also like this 50% of the previous week's body. So let's go down to our 4-hour time frame and see what price has for us right there. All right. So having in mind that we have news every day this week, let me go back to the weekly time frame quickly. So let's say price is bullish, right? I want us to go to the top side. We can expand all the way up here. If it's bearish from the open, we can expand all the way down here. So what I'm going to do now is I'm going to mark out buy side, so sell side liquidity for the week. I'm going to mark this out as a swing low. This is our swing high for the week. Okay, you know what I'm going to do? Range low, range high. That's a better way. Because at the moment we're caught between the range high and the range low. So alright. So we have these two levels now for the week coming up. I'll go as low as the 4-hour time frame, but you know how the model goes. At the open, we want to see where price, So what levels overlap? Let's see. On the 4-hour time frame, we have this fair value gap here that could get filled up. So that could help price, if we can get a daily close above this wick, then that shows a sign of strength. That shows price wants to continue to expand to the top side. If you have a daily close below here, then it means the opposite. So right now we can see Friday close with a big bottom wick. So we could have Monday run out Friday's high, create a dealing range for us to continue to trade to the top side, depending on what price is going to do reacting to the news. Okay, so that'll be all for this video. Make sure you guys tap into the live stream, comment, subscribe, like the video. I'll be posting my trades throughout the week, so make sure you guys check in for that. Keep a notification bell up. To a profitable week. I'm out. Peace.